Welcome to Academic Gain Tutorials. In this video, we will look into the differences between equity value and enterprise value. Equity value constitutes the value of the company's shares and any loans that the shareholders have made available to the business. The calculation for equity value adds enterprise value to redundant assets or non-operating assets and then subtracts the debt net of cash available. Total equity value can then be further broken down into the value of shareholders' loans and both common and preferred shares outstanding. On the other hand, enterprise value constitutes more than just outstanding equity. It theoretically reveals how much a business is worth, which can be useful in comparing firms with varying capital structures because the capital structure doesn't affect the value of a firm. So, let's look into the basic differences between equity value and enterprise value in a tabular form. Difference number 1. Equity value represents the value attributable to shareholders, whereas enterprise value represents the total value of the business, including debt and excluding cash. Number 2. Equity value focuses on ownership interest from the shareholder's perspective, whereas enterprise value focuses on the overall business value from an acquirer's perspective. Number 3. Equity value is calculated as share price multiplied by total shares outstanding, whereas enterprise value is calculated as equity value plus debt and other obligations minus cash. Number 4. Equity value considers market cap, preferred shares, convertible securities, and shareholders' loans, whereas enterprise value considers market cap, total debt, minority interest, preferred shares, minus cash. Number 5. Equity value measures the value of equity holders only, whereas enterprise value measures the value of the entire firm including both debt and equity holders. Number 6. Equity value is mainly used by shareholders, owners, and investors, whereas enterprise value is mainly used by acquirers and analysts in mergers and acquisitions. Number 7. Equity value ignores the company's debt and cash position, whereas enterprise value adjusts for both debt and cash to reflect a more accurate acquisition cost. Number 8. Equity value fluctuates daily with stock market movements, whereas enterprise value is relatively less volatile since it balances debt and cash with equity. Number 9. Equity value is useful for portfolio management and assessing shareholder wealth, whereas enterprise value is useful for comparing firms with different capital structures and takeover valuations. And difference number 10. Equity value is like a snapshot of shareholder wealth, whereas enterprise value is like a balance sheet showing the real cost of acquiring a business. So, these are the differences between equity value and enterprise value. If this lecture was helpful, give it a thumbs up and subscribe to the channel. Thank you.